Was Friday nothing more than a trap as we saw the NASDAQ up over more than 2%? Let's not forget, there is a major catalyst that could be hitting stocks at any moment. Now, as we come over and look at Friday's price action, as we can see, all four of the indices were well in the green. Then we come over and look at advancing issues versus declining. We had 78.2% of issues advancing on the day. Basically, there were no sellers in the market. Even if we come over and look at how the sectors perform across the board, we only had one sector in the red, communication services. Every other sector was in the green. And look at technology. Technology has been taking a little bit of a beating lately. However, it was the top performing sector on Friday. But that still does not answer the question, was Friday's price action nothing more than a trap? Because when we look at the MACD indicator on the daily chart, we still see it's crossed to the downside. And I would not be the slightest bit surprised if we go up a little bit more before they simply rug pull the market. As we come over and look at the fear and greed index, right now we'd made it back over into neutral territory just by a itty bitty little smidge. And we also look at the most recent investor sentiment survey. What do we have? Well, this week, the bulls dropped down from 44.4 to 39.7. The neutral category jumped up from 24.8 to 31.3. And the bears also stepped down from 30.8 to 29.0. And as we look at the VIX, we can see we had some massive volatility out there. Now, the VIX on Friday was down 18.41%. And anytime the VIX closes down more than 10%, we expect the next 1 to 2 sessions could be a down day in the market. So will it be Monday or will it be Tuesday? Or will this stat simply fail this time around? Now, on Friday, some of the bulls are out there cheering, especially if they're trading the Dow Jones. Dow Jones finally cracks 50,000. Dow Jones, the first one of the indices to go ahead and start making a new all-time high. And notice the Dow has had this consolidation up in this area. We get a breakup, but now come down and look at the MACD indicator. Is the MACD indicator making new highs as we're breaking the new all-time highs? Not yet at this point in time. Also, if we look at the Russell 2000, not at new all-time highs yet. We look at the Qs, not even close to all-time highs. And we can say the same thing about SPY, not even close to all-time highs in the market. And let's not forget, we just got another ominous warning. Hindenburg omen spotted in U.S. stock market. It could signal more pain ahead for investors. Now, one of the things we want to pay attention to is not necessarily do we get one of these signals, but notice we've had a cluster, and it actually goes on to say it was the third Hindenburg omen in 6 days, which could be problematic. We come down here real quick and we look at this chart. You can see as the market's extended, we're starting to see quite a few of those signals. You can see right here, we had this nice little correction there. We had another one right here. We had another one right before the 2020 pandemic crisis that caused stocks to come cratering lower. And we could be on the verge of the markets coming down here just a bit. And let's not also forget, oil markets on edge over elevated risk of a U.S. military strike against Iran as soon as this weekend. Now, let me know in the comment section down below, do you guys think the U.S. is going to go ahead and strike Iran? Let me know your thoughts in the comment section down below. Now, even though I do not trade Bitcoin, I still think it's very important to look at it. I look at Bitcoin more as a risk on, risk off type of asset. And we can see on Friday, Bitcoin most certainly had a massive rally on the way up. But notice how far Bitcoin has dropped. It's made it all the way down here to 59,934. However, if we flip this over to a weekly chart, we can still see that we have an ABC pattern to the downside, which actually completes down here at 51,770, which could imply that there could still be more trouble up ahead. And if Bitcoin comes crashing down towards those levels, what do you guys think stocks are likely to do? They're probably going to follow suit as well. Now, if you think that price target seems a little bit crazy, look at this chart right here. Bitcoin drawdowns from all-time highs. You can see right over here, back in 2011, 93%, 2015, 84%, 2018, 83%, 2022, 76%, and a 70% pullback would take Bitcoin well below that price target I just shared with you guys. And let's go ahead and measure that out real quick. How far would 70% actually be? 70% would take us all the way down here to about 37,000. And you can see here's the 70% pullback. Here is the ABC target that we have on the weekly chart. You would start for measuring the ABC pattern from right up here, A to B, B to C, and we project all the way down to D. So we have multiple reasons to think that Bitcoin could go lower, and that could also spell more trouble out here for stocks. Now we look at the dollar index on the weekly chart. Notice we've had this consolidation, we wick below it, and we're coming right back up once again. On the daily chart, we see the dollar on Friday starting to pull back, but is the dollar gonna have a minor pullback and set up a larger ABC pattern on the way up? Gold and silver could be on the move back up. Gold had a massive move on the way down, and now it looks like it could be firming up here just a bit and try to get a little bit of a move up, and that could actually set up some type of MACD divergence. Now, if gold does go ahead and rally up, let's say to 61.8, then I do want to be very cautious because one, we could turn for the move back down, but number two, notice where we are in relations of that widespread bar. We're over 50% of that candle, which increases the probabilities that we'll come all the way back up there towards the candle body. So that's something we most certainly need to pay very close attention to. Also, if we come over and look at IGV real quick, which could be the software sector, which software absolutely has been getting destroyed. We've seen the likes of Oracle, yikes, not doing too good. Microsoft coming all the way down, filling the gap. So it's going to be very important. Is this ETF getting ready for a bounce? Well, if we look over here to the left, notice we do have a swing point right up in this area. The MACD indicator is also very, very low, but I do not see the MACD indicator trying to turn at this moment. But I will tell you, this does look way, way overextended. We have a massive gap way above us. And if this can start to bounce on the way back up, will that be what the stock market needs to actually push on up higher? Or again, is this little rally up that we're seeing that started on Friday going to be nothing more than a trap? When we come over and we look real quick at the Dow Jones versus the transportation index, we've been talking about this each week on the Sunday videos. But notice once we broke down this declining trend line, it has been a rocket ship on the way up. And this has been one of the reasons it had a little bit of calls for concern in terms of a market having a massive pullback. We see the Dow Jones actually pushing new all-time highs. So the transportation index was giving us a heads up. Watch out, we are probably going to go a bit higher. But then we come over and look at the SPY versus HYG, which is going to be high yield bonds, which can also be seen as a risk type of play. And notice HYG did start dumping when the stock market was dumping this week. But even before that, notice HYG started to put in a lower high right up here before we actually see the market starting to tumble down. Now, we did get a little bit of a bounce on Friday, which is really no surprise. And here's another chart that has me a little bit concerned. We look at the spread between the 2-year and the 10-year. Notice it's starting to steepen once again. And the steeper this thing gets, the more problematic this could be out here for the stock market. And we could be in for one heck of a pullback in this market. Something else that just got a pullback was Apex Trader funding, 80% off all accounts and special activation fees. Not only can you take advantage of this offer by using the link in the description box down below, but also go to prop firm Mike, and you can also sort the different prop firms to see which one best suits your needs. For instance, let's say you want a prop firm that has a $75,000 account. Well, that would be Take Profit Trader. If you want to search all the different challenges, there's other parameters that you can also search for. And if you simply click on the prop firm there or go right under here to prop firms, and you not want to only see all the challenges they offer, but you want to scroll down and see the evaluation rules, hard breach rules, funded rules, all in one place. Don't forget to check out prop firm Mike. Now, something else that has me a little bit concerned that this could all be nothing more than a trap. Right here, we see layoffs in January were the highest to start a year since 2009, Challenger says. And I don't know about you, but layoffs on the rise to me does not sound like a very good thing. Now we come over and look at the SPY real quick, and notice we have a wick on the bottom of this candle on the weekly chart. We have a wick on the top, basically a candle of indecision. We really went nowhere. We went up, we went down, and we basically finished very close to where we opened up for the week. Now, the MACD indicator on the weekly chart is still crossed to the downside, has not come anywhere close to the zero line just yet. Now, we come over and look at the daily chart. That was a very impressive day we had out there. The SPY was up 1.92%, having a nice little relief rally on the way back up. Come over and look at the options data real quick. Notice right now we are in negative gamma, and we come over and look at the GEX levels. Notice we have quite a bit of gamma exposure right up here, right around that 700 strike price. But when I look at this chart, I still see more red than I see green in terms of how far the red or green protrudes past basically this center line right here. Notice to the downside, we have a lot of gamma exposure right around 675 and 670. Well, if we come over and look at this chart, notice the low where we bounced off of was right around that 675. Now, if that level gives way, 670, well, it comes down towards the high volume node. We look left, there's also a swing point right there. But what's even more important about this is if we start flushing through some of these high GEX levels, that could actually cause a waterfall effect, and we can see the market rapidly start to accelerate to the downside. So we want to pay very close attention. In the meantime, we were able to get a bounce on the way up. But what about a Fibonacci retracement from the swing high right down here to the swing low? Notice we stopped just below the 786. Now, if we start accepting price above the 78.6 at 693.01, then I'm going to expect the market will go ahead and make a new all-time high, similar to what we see the Dow Jones doing right here, right now. Now, when we come over and look at the 4-hour chart, what do we have going on there? Not a whole lot different. MACD indicator is trying to cross on the way back up. On the 30-minute chart, we are way elevated on the MACD indicator, trying to get a little bit of a roll effect. But notice, on Friday, we slightly closed above value area high, which anytime that occurs, we expect the next 1 to 2 sessions, the market will come back and visit that level. But also, look at the last 30-minute candle. We have quite a wick on top of that candle, and we closed roughly in the middle part of that range. For the whole entire session, it was just up, up, up and away. Simply no pullbacks to be had. And when we look down below us, we're leaving a gap behind where the market gapped up from Friday. Now, I was happy to see that we're able to fill the gap on Thursday, but now do we start to see the market pull back here just a bit? Let's not forget, we are still in earnings seasons. Plenty of earnings to come out this week, which could also fuel a catalyst for the market. And when we look at the big expected movers out there, look on Tuesday, Datadog and Lyft both have expected moves of plus or minus 15%. Wednesday, Shopify is right around that ballpark, right around 14.5%. Then on Thursday, we get Roku expected to move roughly 15.5% or so. So we have some big potential movers out there. Now, it's not just that, but when we look at the economic calendar, what do we have coming on? Really, Monday, I don't see any major economic news. On Tuesday, we get core retail sales coming out, the employment cost index. But then on Wednesday, we're going to get the NFP numbers coming out, average hourly earnings, and the unemployment rate. Then on Thursday, we get the weekly unemployment claims. But then on Friday, we're going to get the CPI data coming out. Now, let me know in the comment section down below, do you guys think the CPI is going to show that inflation is back on the rise, or that it has subsided and Jay Powell is successfully defeating inflation? As we come over and look at the S&P futures markets, that was one heck of a move on the way up from Thursday night all the way back up. Notice if we were to measure, and this is simply no pullbacks allowed, we had a 213-point range, and it really feels like it was nothing more than a short covering rally after all the damage that was done in the stock market. Now, if we were to pull a fib from the swing high right up here down to the swing low, notice we stopped right below the 78.6 Fibonacci retracement level. Now, I do want to caution you, if we start breaking above that and accepting price, at that time, we'll probably do a full retracement all the way back up. And from that point on, we'll probably see the market making another new all-time high. However, if that is going to take place, I also want to go ahead and pull a fib from the low to the high on Friday. Now, if we go higher come Sunday night or even Monday, we'll have to grab the Fibonacci retracement and just simply move it on up. But I want to look, once we start to get a little bit of a turn, does the market come down to the 38% retracement and then bounce, or maybe the 50 and 61.8? Well, the 61.8 comes in the high volume node right here. The 50% level is right on the other edge of this minus development area within the composite profile. Now, when we come over and look at the daily profiles, look at the range on Friday, 214 points, absolutely massive. Now, if we do start to get a pullback on Monday or so, some of the key levels I'm really watching, other than value area high, point of control, and value area low, are going to be some of these minus development areas. The first one would be about 69.23, but the one I'm really salivating, hoping I get a chance to trade back down towards, is going to be somewhere around 68.68, this whole entire area. I really want to zone this out, and that entire zone for me is going to come in anywhere from 68.74 down here to about 68.65.75. Now, if we were to pull a Fibonacci retracement from the low right there to the high, notice where that level comes in. That juicy level comes in right between the 38% and the 50% Fibonacci retracement level. Also, we have a structure breakout point right here, which also has not come back and been tested just yet. So we have multiple reasons for there to be a very valid target in this area. But what we need to see first is, do we stay below value area high, and do we get a rejection on the way back down? If the market simply goes above value area high, well, guess what? We're probably going to continue to go higher, and I really don't want to be on the sell side of the market until we get back below value area high, which comes in at 69.60. Now, in the event that we break value area high early on Sunday night, even Monday, when we start coming back down, that's when I want to start to target the point of control, because that will be an untested point of control, 69.35.25. Then below that, I'm going to be really looking for the market to come down towards that big juicy minus development area. Now we come over and look at the Qs. This looks a little bit weaker than what we have on the S&P. This is going to be a weekly chart. The candle body is a little bit larger than what we saw on the S&P. And notice we have quite a large wick on top, quite a large wick on the bottom of this candle. MACD indicator still crossed to the downside. And really, if we can start trading a little bit lower than what we saw this week, it really opens the door that we're going to re-auction this whole entire minus development area and maybe work all the way down towards this high volume node at about 519.20. And I know some of you guys think, Mike, there's no way we're going to make it down there. Well, I want to see something real quick. If we were to measure a Fibonacci retracement from the low, and this is on a weekly time frame, look where the 50% level comes in, right near that high volume node. So it's really not as far out as you may think. Now, do I think we'll get there this week? Probably not. If we do, well, it'll be one heck of an exciting week out there for us. On the daily chart, Friday, we had a massive bounce on the way up. And the question is, do we simply come up towards this high volume node at about 619 and then we reject back down, which could ultimately end up setting an ABC pattern on the way down? Now we come over and look at the gamma levels. We are still in negative gamma, and notice right down here around 600 and 590, we have quite a bit of gamma exposure. When I look at this chart, I see more red in terms of going past the zero line to the left than I see of green going past the zero line over here to the right. So 600 and 590, let's see what that correlates to on the chart. Well, on Friday, we closed at 609. If we breach the lows of last week at 594, we're probably going to go all the way down towards 590. We breach that, we're going down towards the swing point. And then from that point on, we could really get a waterfall type of effect. If the dealers don't come back in to hedge that position, watch out, it's going to get ugly out there. Now we come over and look at the NASDAQ futures real quick. What do we have going on? Notice we did not retrace up nearly as far as what we saw on the S&P. If we were to pull a Fibonacci retracement, swing high to the swing low, we were only able to retrace to the 50% level. Keep in mind, the S&P was almost 78.6 of the retracement on the way back up. And look at the candle that we have on the close. We have a wick on that candle. So are we going to simply come back down? Because right now, this could be part of a larger A to B equals C to D pattern on the way down. If that high holds and we come down and start breaking the low from this week, that gives us a price completion on that ABC pattern all the way down here at 23,593. And we also have an untested point of control down there at about 23,916.75. Now I come over and look at the daily profiles on the 30-minute chart. Notice right down here, we have one heck of a minus development area all within this area. You can see we had this little basin level right here. We broke out. We also have a structure breakout point. We have failed to come back and test at this moment. So I want to go ahead and highlight this area right up in that zone. That's going to be anywhere from about 24,699 to about 24,602. Now, do I think that we necessarily get there? Maybe not. Maybe we do, maybe we don't. If we can break above value area high and we stay above it, I simply want to disregard this level until we can get back below value area high. Right now, we are below value area high, but ideally, I'd like to see us break above it, get a rejection, basically look above failure, and then come back down, and then target that point of control at 25,096.25. Now, value area high will be 25,195 and a quarter. Now, in the event that we can break value area high, where would be the next target above us? Well, for that, I really want to see, can we come back up towards value area high from the prior week? Not only is it value area high, but notice it's also a high volume node on the weekly profile. We clear that level, then I'm going to be looking right within this minus development area above us, somewhere in the ballpark of 25,665 or so. Now, if you guys trade with prop firms out there and you want to learn how to trade Apex Trader funding on the TradingView platform, then you want to make sure to watch this next video right here.